In this video, you're going to learn everything you need to know about HIP-3, which is Hyperliquid's biggest and most audacious upgrade yet. You're going to learn what it means for the ecosystem, what it means for your bags, and which protocols will directly benefit from this upgrade. What is HIP-3? So Hyperliquid Improvement Proposal 3. So this basically allows anyone to create a perpetuals market. So perpetuals futures, a derivative. Do Hyperliquid not already have those? Yes, they do, but they are kind of like pseudo semi-permissionless, decided on by, I suppose, the community and the team who's going to deploy it, right? So this effectively allows anyone, few caveats to that, to be able to create a perpetuals market, right? So why would you want to do that? So what the underlying issue is inside the industry is a lot of centralized exchanges having a lot of shady background deals with regards to token allocation towards the exchange's treasury in return for listing, right? I do appreciate that is a spot token, but this also goes on for derivatives as well. There's been a recent case of DeFi, the DeFi.app, where they had terms already solidified on their Echo raise. So a lot of community members were bought into that. They were happy to kind of get exposure to that. And then at the 11th hour, Binance, I assume in return for a tier 1 listing on day one, have came in, changed the terms, and now they're less than favorable for everyone involved. So there was a bit of a kerfuffle about that. No one's happy. And this just happens all the time. Binance want everyone on the same terms, and they want them. They're in a situation where 6 shares, and if it works, it works. They've got a billion different bets open. The average person on the street isn't in that fortunate position, unfortunately. So the other issue is Binance US seem to be listing tokens that people actually want, right? So they do know which tokens people want, and it's like they're just basically choosing whether they can kind of mass extract from these teams by getting a large token allocation from them. So Binance US recently listed Hype and Farcoin. Other than BTC, probably the most talked about coins over the past 18 months. So they do actually know which tokens people want. So yeah, they're basically just choosing to not do it and favoring kind of these more extractive processes for getting huge allocations from teams. And then you've also seen, everyone knows the Perpetual's kiss of death when tokens ran up really, really high, gets a tier 1 listing on perps only, and then it just gets shorted to high heavens. People have an instrument then to be able to, I suppose, cash in their profits without being able to be seen selling their on-chain tokens, right? So TLDR, stupidly opaque, nothing transparent about it. I thought we were supposed to be creating more transparent markets. That's what crypto is all about. If anything, we went back over, right? So back to HIP-3. Remember, permissionless deployment of any perpetual market, right? So what does that mean? And can anyone do it? Can you do it? Can I do it? Well, if you've got $1 million staked Hype, not $1 million worth, $1 million staked Hype. So at $40 per Hype, $40 million in today's money, right? So probably excludes a lot of people that will listen to this out. There might be a couple. There's any Hyperliquid whales that have blockmates, listeners, and readers. Pretty sure there are quite a lot, to be fair. What type of markets would actually be deployed in this format, and what would the actual deployers of these markets actually be doing? So if we take like a little zoom out, have a little look at the infrastructure for a sec so you can kind of wrap your head around it. Hypercore, the exchange, which is where you've probably traded spot and perps markets, this is currently doing $10.5 roughly billion worth of perpetual volume a day and around 500 million in spot. So the Hypercore infrastructure enables the spot and the perps market, right? Ignore Hyper EVM for now. And then what HIP-3 will allow is, when coupled with 1 million staked Hype, it creates a system where anyone who's actually staked their 1 million, I suppose it's a bond, which can be slashed. So if there is any like malicious behavior on that, there is a 7-day unstaking period. So, if it's any shenanigans going on there, then they're going to get slashed. That's where obviously the consensus mechanism comes in really, really handy. So I've got a few examples here. What it would take would be to bring your traditional markets, equities, commodities, FX, prediction markets. They're just like some basic examples. But what is the implications of that for Hyperliquid, for Hype holders, and I suppose finance in general, right? So everyone knows Hyperliquid. It's gaining traction on the top centralized exchanges. It's making up 22% of, let me just zoom in on that, 22% of Bybit's daily volume, 10% of Binance's, and around 20% of OKX. Great dashboard as well by Hyperflows, so go and give that a check. So gaining ground within this realm. People said it couldn't be done. People said it would die after the airdrop. Bybit just announced they're creating a on-chain Perpetual DEX called ByReal, so I think they know the writings on the wall. But anyway, back to HIP-3. So if we just take your traditional equities indexes like the SPX or NASDAQ, globally, they do $500 to $600 billion worth of volume a day across different instruments. And then that was for SPX. And then NASDAQ does around 250 to 350 billion a day. So these are volumes that are completely dwarfing the entire crypto industry just for one kind of product, right? Gold, obviously, it would have been nice to be able to long gold, given all this kind of like geopolitical uncertainty on chain. Silver, probably less so. And then you start getting into the ideas of, could you bring FX on chain? Why would you want to do that? Well, FX markets trade trillions of dollars every day, with the teeth. So if you were the deployer of said markets and you got your fee structure right, and you got the marketing right, and you got the right market makers, and you got everything correct, then there's a pretty penny to be made across any of these markets, really. So that is the opportunity. If we just do some moon math for a sec, what it could actually mean, I appreciate these numbers might be hyperbole, and it definitely won't happen from day one or even short term, I can imagine. It's definitely a more medium to long term, but as these markets mature and come online, it definitely could look like something like this. So let's go through. At $550 billion worth of notional traded per day, assumed market penetration of Hyperliquid's HIP-3 markets of 0.1%. So not 1%, 0.1%. If Hyperliquid's HIP-3 market got 0.1% of the SPX volume a day, that would be around $550 million worth of volume traded per day, which we're going to do some more assumptions. We have to do this, change the variables to however you see fit. I'm just trying to use them as demonstration purposes. Trading fees, assuming 0.1% fee, is 550,000 daily fees. Fees split, deployer gets 50%, and then the protocol gets 50%. So these are just rough numbers playing around. We can play around. There's probably a calculator on that we could spin up to actually do this. But let's say that all being well, even at that 0.1% and those standard fees, that's around 275,000 a day for the deployer and 275,000 a day for the protocol on one market, right? That's one market. You could assume the penetration rate over time would be higher. Play around with the variables however you see fit. Gets really interesting when you bring in different markets on top of this as well. And the real thing is because these are permissionlessly deployed, there's no way on earth you're going to have one sole deployer of the SPX market. That is too big of an opportunity for one person to have a monopoly over. If you look at the Bitcoin ETFs or the Ethereum ETFs, like how many providers are there for that? They all have different fees. They all have different rebates. They all have different incentives. Think about it like that, because what's going to happen is these deployers who have the 1 million staked hype, that's how they're going to act. They're not buyers of these tokens. They're sellers, right? Same as the BlackRocks and Fidelities of the world. They are sellers of these products. They're going to have to market them. They're going to have to get the right association. They're going to have to get the right market makers. They're going to have to get the right Oracle providers. They're going to have to get the right liquidity incentives. Because remember, all of these markets will not live on the Hyperliquid DEX as you know it today. Every single deployer has to spin up their own front end. They're going to have all the underlying matching engine, liquidity provision solutions, everything that comes with infrastructure they're going to have, but the front end, the liquidity, the market makers, everything that you would need to get a market off the ground, you only have the hypercore tech. That's what you're paying for, and that's what you're bonding the million hype for. Everything else, well, that's up to you, and that creates this competitive market for anyone to be able to spin up and come up with weird and wonderful ways to actually become the number one provider of this specific asset class on Hyperliquid. Well, on the Hyperliquid infrastructure. So what it'll look like is you're gonna get this is gonna create a fragmentation of all these products. You're probably gonna get a situation where you have, let's say someone is hell-bent on having an SPX product and a NASDAQ product. They're going to have their own front end. They're going to have their own way to deploy. They're going to have their own maybe vaults to incentivize liquidity, similar to their own version of HLP. So that's how it's going to play out. And if you kind of play that out over the long run, it also creates a situation where if deployer 1 has got a gold market and deployer 2 has got a gold market and they're in competition, the fees and the incentives, they're going to settle somewhere. So it's going to be like, well, we're giving you X incentives. Maybe we're giving you trading incentives to trade on a weekend, or we're giving you kickback for any losing trades. I think Robinhood do that. So it's going to get weird and wonderful, but there is the issue of fragmentation. The caveat to that is the more markets, the more volume, the more fees, and then the more fees share towards Hyperliquid. So if this starts bringing in significant volumes per day across multiple different markets and multiple different competitors and products within a market, the buy pressure on Hyperliquid is going to be on the Hype token is going to be ridiculous. Now, it hasn't been categorically said if it's going to go towards the assistance fund, similar to how the spot fees and the perps fees on Hypercore do. But you can kind of figure out what's going to happen there, right? It's pretty similar. That's the whole mechanic and the buyback and burn mechanism. So yeah, do some moon math, try and work out what the fees would be, what the buy pressure would be, and then you can kind of get ahead of yourself quite quickly. So a couple of weird second and third order effects that might come out of this. Obviously, the 1 million hype is a lot. There's some people that have got that individually, but you're not going to be able to deploy the market make it, market it, come up with liquidity incentives. No single person's going to be able to do that unless you fucking Jeff himself, right? So what I think will happen, and which gets onto where I think the opportunity could be now in the ecosystem already to get kind of like early access, I think you're going to get these staking collectives or that make up kind of Oracle providers, the people providing the hype, the people who are committing to provide the liquidity for the markets, the front end builders. It's a big team that is needed to pull this off, but you've got to think, like, if they get it right and they're driving some serious volumes for every day, it's going to be extremely profitable, right? So they're acting like this on-chain Hyperliquid BlackRock, Hyperliquid Fidelity. That's the kind of way people will be looking at it. So I think liquid staking protocols could be a very, very, very good candidate and exposure to this, because you've got to think they've got an amassed amount of hype that is delegated technically towards them from their users. So in that, if you play this out, what it could look like, what we've seen previously across different DeFi verticals, is you have a liquid staking token. So people deposit their hype with, let's say, who do we know as liquid staking provider? Kinetic, about to come online. Let's say you stake your hype with Kinetic. In return, you get like K hype, which is a liquid staking token. Maybe there's a governance token on top of that as well. Now, Kinetic can then go towards their market makers or HFT firm and Oracle providers, say, well, we want to spin up a Euro USD market, right? We've had the community buy-in through governance vote that they want the Euro USD market because they foresee additional volatility in that market coming over the couple of years, and the volume on that market is in the trillions globally each day. So that seems like a profitable endeavor to go and pursue. And then maybe those fees that are taken from that are then distributed to either the LST holders or the governance token holders. So then the average person on the street gets to get exposure through token staking or just generalized holding of the token to being one of these deployers or token holders pro rata share of what's actually going on with this kind of like staking collective or liquid staking provider. So that's what I think will happen. And then it gets really funky on, well, you've got to remember these teams need to incentivize this liquidity. So there's probably going to be a shit ton of tokens that get spun up to be used as incentives. I think the best team that ever did this was Lido. They managed to get on Aave. They kind of incentivized their way to having like super strong market share with regards to that. They did really, really well on Curve. And then there's probably going to be layers on top of that as well, like bribe markets on top of these liquidity layers, and then aggregators of where you deploy liquidity, like based on your risk profile. So I might be more than happy to go and deploy into and be a liquidity provider across the Euro USD and the Yen USD markets and the crude market. So like it's going to get really strange really, really quickly, but I think it's like something that we haven't typically seen before that sits on top of a product that has supreme product market fit. We kind of seen it a little bit with Curve, but this is a total different magnitude. This is a total different level. What you could also see is I'm calling this like the off-grid launch or the off-grid deployment. With HIP-2, that is buying a ticker on the spot auction on Hypercorp. You could this hypothetical team comes along, they buy the ticker on the auction, right? Then they go to one of these staking collectives or a liquid staking protocol and say, we would like to give you a couple of % of our token for you to then go and create, because you have the 1 million stake type and you are a deployer. So then you've got a fully transparent perps and spot market with a transparent allocation amount, super aligned with inside the ecosystem, and everyone's incentivized to do well there. I think you might see that as well. No centralized exchange needed, no shenanigans, super public. Everyone's winning, hopefully. So what does it mean for you as a hype holder? Or if you're sidelined, you might want to look away at this bit now. So the hype demand's obviously going to rise. Anyone who wants to act as one of these deployers is going to need a million stake type, or they're going to have to go and collectively amass it, whether that's on the open market, OTC, whatever. There's going to be a lot of these teams. I've seen Van Spencer from Framework already said they're looking to kind of bring a load of markets online. Maybe Framework have already got the million hype, but there's no way on earth that this isn't going to create a competitive market for deployers. It's just inevitable that it's going to happen. It's like BlackRock being the only ETF provider in the market. Just not going to happen. There's too much opportunity here. So more 1 million hype locks, reduce circulating supply, fees are going to flow drastically to either it's going to be towards stakers or it's going to be towards using the fees to then buy hype through the assistance fund, and maybe that gets burnt. So you're going to get scarcity pressure, price appreciation, more DAO-driven hype governance, I believe, sustainable staking yields. I don't want to say the word flywheel, even though I've put it down here because it makes me feel a little bit sick. But TLDR is global derivatives volume equals extremely sizable fees, more hype bought by the assistance fund through the fees, more hype burnt at sizes we haven't seen before, potentially billions of dollars worth a year. Right? So that's that in a nutshell. I will leave all the links below. As I say, I think anyone who's going to solve the aggregation issue is probably in a very, very good position. Some of the Oracle providers, like the Pith, probably do pretty well from this. Anyone who makes all the multiple different DEXs and marketplaces and products into a single user interface, if you are building that, please come speak to me. I'd love to help fund it. And yeah, in the liquid staking protocols, I think they're going to be in a very, very good position because of the amount of delegated hype that they're going to have. So yeah, lots of new games to be had, lots of new opportunities. I think it's just going to kind of cause the ecosystem to explode. And then that's even before we get onto Hyper-EVM. Again, if you want to learn more about that, in the top right. If you like this content, I've got a few more ideas up my sleeve about what's happening in the Hyperliquid ecosystem, how you can get some early access to some of the opportunities. We cover an awful lot of that stuff on this channel, so give a like, subscribe, and we'll see you next week.
Quick one, nothing here is financial advice. It's for entertainment and educational purposes only. Always do your own research or speak to a financial advisor before making any investment decisions.